Hi guys, it's Alec here, and today I'm touching on a subject that it's really close to my heart. It's budgeting and forecasting, and what an important thing to do in a business. The reason why I really love it is because that's one of the reasons why I actually, over the years, delved deeper into becoming more and more proficient with Excel. And the environment that Excel gives you actually is a very cool environment in which you can actually forecast your business. Now, I think any manager out there would know that they would want to forecast and they actually want to see the future of their business. So this is a environment that's very abstract, because ultimately you're trying to predict the future, right, with a budget and forecast, but you often base it on the history. So in the past, I used to only use raw spreadsheets, and I must be honest with you, when you really get into big financial modelings and those kind of things, the spreadsheets, they just become so big that you ultimately actually break them. It's just so many formulas and it's so many things going on in that one engine. And then you get to a point where you say, now, I kind of have finished the budget or the forecast or the model. And next time when you want to get into it, it is a very difficult environment to kind of build on, because it's already big, it's already slow, etc., etc. Okay, so today I want to show you guys what I've learned over the years, and it's data tools that can be used within Excel to enhance your ability to do budgeting and forecasting. And it's phenomenal because it's actually been built in a way that ultimately is there to enhance processing. Okay, so I'm going to touch on data tables, DAXing, range names, and pivots within this session, and I really hope you enjoy it. Okay, so I'm going to do this within our app called MyBudgets, and here we go. This is a MyBudgets app, and it doesn't look like much at this stage, but let me explain to you guys firstly as to what we're trying to achieve when we do modeling and budget. So when we budget and model and forecast, what we're trying to do is we're trying to predict the future, and usually we're trying to have some stable base, which is actual values of the past, or some kind of a market analysis that has indicated to us what currently is happening, and we're trying to take that forward with certain assumptions that we've now got in our hands. And then you also want certain building blocks in your hands, which usually makes it easier to have, for instance, month-to-month results versus only having one global yearly number is much easier, because then you have smaller workable values, and you can actually see trends. For instance, you can then predict more efficiently because you've got a trend. Let's say, for instance, if you look at your historical trend, you can see that December is a slower month than the rest of the months. Then you can obviously predict that, and you can actually build it into your monthly forecasts, so that you as a business and a business owner can actually better anticipate that kind of trend. So let's first start with assumptions. Assumptions are basically little pieces of information that you try and build your model or your forecast on. So in our in this MyBudgets app, by the way, this is an app that we've built for this, and it's it's built to enhance and improve the ability for you as a team to really forecast. And here in this assumptions tab, I'm going to move it. Whoa, there, I'm falling off my chair almost. But anyway, I'm moving my. I'm going to show you guys assumptions within this environment. Okay, so the MyBudgets app plugs into any Pastel Partner, Pastel Express, or Sage 50 cloud database. But let's first start here with the assumptions. Okay, so let me quickly give you an example. Okay, so an assumption, for instance, is something called like inflation. For instance, inflation is something that you say, well, inflation has an impact on my future, right? There's an impact on the values of the future. My expenses, for instance, we think they're going to go up with inflation. Okay, so that's a assumption. Okay, you don't know what it is, but you're going to actually assume it now. And usually it's better to have different scenarios. Why? Because you don't know, you're still predicting the future, so you want some kind of robustness to say, well, you know what if I have a low and a medium and a high or a scenario that's least likely, likely, and most likely, or something like that. But what I'm going to go for here is I'm just going to do scenario 1, 2, and 3. And working with colors in a budget or in a forecast, actually in a model, actually helps you, your brain to look at the spreadsheet and immediately interpret different cells on that spreadsheet. So what I'm going to do here is we've got a little drop down menu here, and within this drop down menu below it, it actually calls up through an index and a match function. It calls up which scenario we've selected. So now we've selected scenario 1. But I don't want to call it scenario 1 because scenario 1 is usually quite difficult to manage throughout the model. So I'm going to go for a low, a medium scenario, and a high scenario. Okay, so yellow in my world is changeable little cells. Okay, so what I've done here in this cell, this is a data validation that we've put in here, which gives you this little drop down list. But you'll see it actually automatically has updated my my selection that I've typed in here, and that is done through data validation and an indirect formula. And now if I, for instance, say, well, I'm going to go for a low scenario, then you'll see everything balanced. It goes back to 0 because it's saying, well, there's nothing in there. So let's take a few nice assumptions here. Let's say, for instance, we want inflation, and then we want something like GP percentage, or expected revenue growth. Let's do that one first because we all know that revenue is important, growth. And then we got a GP percentage, which if you don't know, gross profit percentage. Okay, then let's go for something like something we all want, right? Bonus, December bonus. Let's do that, December bonus. Okay, so now we say, let's for instance predict this. Okay, so let's say inflation, we think on the low scenario is going to be 3%, and then it's going to be 6%, and on the high scenario is going to be 9%. Okay, then on the revenue growth side, okay, we're going to say, well, on the low side, we're hoping to have a 10% growth, then we're going to have a 25% growth, and then we're going to have a 40% growth. Cool. GP, right, let's predict this. On the low side, we get 30%. Now remember, you guys as a business owner or whomever is doing this will have a gut feel, and it's not just numbers you just spit out, but obviously for this purpose, we are going to spit out some numbers. GP, 50% on the middle, 50, and then 55% on the high. Let's do that. And then December bonus, you know what, low scenario, we're going to have nothing. There we're going to have 50,000 Rand, and then we're going to have 100,000 Rand on our high scenario. Okay, cool. So now if I go from, let's say low to medium, you'll see that these things are starting to change. Right, now's the next thing, range names. So, okay, remember now, we are not spreadsheet builders, we are mathematicians when we do stuff like modeling. Okay, mathematicians means give me building blocks, give me the A, B, C, D of the formulas, and I will write the formulas because I know better. The spreadsheet, its work is to process my formulas. So I need to give it high quality formulas, and it can process like crazy many cells of data. However, if you do it in a data table format or in a data structured format. So let me show you quickly just a few things here. What we've done here is called a range name. A range name is actually a very special kind of way to deal with formulas within Excel. So if you look at this formula over here, this is my assumption number 1. Okay, so assumption number 1, I've made inflation, but assumption 1, we've actually gone and we've given a range name. So look here, we've given it a name there. Okay, now let me show you how you give a name. Let me, for instance, take this cell over here. This cell is J5, right? It's J because it's in the column J and it's row 5. Now I want to say, if I type in, let's say something like 10 there, what do I do if I want to call up that cell? I go equals, I can either type in J5 or I can go and point it to J5. There, right. Now I want to make a little bit of a difference. I say, but I don't want J5 to be J5. I actually want to know in my mind what J5 means, because J5 is very relative. It's very abstract. I don't know what J5 is. But I do know what something like, let's say, the number 10 is. Okay, I know what that is because the number 10 is the number 10. But check what happens now if I now go and I say just below this, instead of equaling J5, which will still call up that, I'm going to say equals the number 10. There, something comes up in my list here. Actually, it says you've got a new range name. Oh, awesome. What happens? It gives me 10. What happens now is, if I were to tell you this, look at this formula. If I'm writing it over here, I'm going to say equals 10 times the number 10. What do I know immediately? I kind of look at that formula and say, but it actually makes sense to my mind, versus that is 100. But if I had to say 10 times J5, I had to literally go and look at the cell J5 to know what the answer is. So you kind of have to keep two things in your mind the whole time. It's this reference, this weird cell reference. So I'm really big into the range name environments. Range names are phenomenal. Okay, so let's go. And now we're going to say we've now actually given range names for all of our assumptions, 1 to 15. So anywhere I can go and say equals assumption, and here we go, assumption 1, what would that be? I know immediate inflation, and it's going to be 6%. Okay, cool. Now it's going to change if I go from high to medium. There, everything changes. Do you see 9%? So, and on the low side, same. So I've got this little bit of a robust environment now on my assumptions, and it's got this flexibility in it because I can actually have different scenarios. Cool. So we've started with our assumptions. Next thing is to have a actual environment in which I can work. So this is a data table, by the way. And now what I'm going to do, this thing taps into one of our demo databases called WOW. So I'm going to run it. It actually goes and extracts all the data, but it extracts it on transaction level. So that's quite cool because there's about 7 or 8,000 lines of GL transactions at the back in this database. But now it goes and fetches it for me, and it's built it into a trial balance. Now that is quite special, because in the trial balance and having transactions at my disposal means I can really now go and start working far more intricately with these kind of numbers. Now remember, now a trial balance is a phenomenal place to start from. Why? Because I have the actuals right at my disposal. So let's see what happened here. Firstly, it's pulled in all of these accounts for me, and against each account it's giving me a description. What else? It's actually pulled in all of my mappings. So I can even have mappings over here, and it says, well, these are all income statement accounts, these are all your mappings, net profit, EBITDA, gross profit, etc., etc. So I've got all of this nice building blocks at my disposal, and look at this, it's pulled in my actuals for the prior year, which is great because we want prior information, and the actuals for the current year to date. So that's also great because that means I've got building blocks of actual numbers, and I didn't have to go and fetch it in a weird way out of an export out of my ERP system. But even further than that, if I open this, it gives me a month-to-month movement, every single month's trial balance movement for against each account, which again is phenomenal because now suddenly I have the ability to go to actually look at the data and say, but I don't have to worry about splitting it. I can now be the mathematicians. You've done the work. I processed it into my ERP system. Just give it back to me, what I've in any case put there, and now I can be the mathematician. Right. So now the next step is, what do we want to do here? We want to build a forecast or a model or a budget. Very similar things, slightly different, but okay, a model is usually quite bigger. It goes maybe 5 to 10 years ahead of time, sometimes 2 to 3 years, whilst the budget is usually just for the year ahead, and a forecast is a bit more a changeable environment, but they ultimately all have to do with predicting the future. Okay, now we are going to have a look. So what we've done here is we want to first talk about what are we working in. We're working in a data table. It's different. A data table is different from a normal cell. So there's a few things here. I can, for instance, click there and you see the whole column from top to bottom is just selected. Why is that? Well, it's a data table. The other thing that's also in it are these cool drop downs, filters. Well, these filters are just phenomenal. So let me show you what I really love about them. They have these smart search functions. If I go account, it calls up everything with the word account in it. But it's a smart function. If I, for instance, say what I need audit, but you see it's not at the start of the word, I can go and say audit, and there it calls up everything with the word audit, or AUDI at least. There you go, audit, and it's only those two that are left. But so it's a nice, cool, smart function, and it also gives you that ability to quickly filter, etc., etc. Now, at the top, remember now we've got assumptions, but assumptions is difficult to keep in the back of your mind. So what we're trying to do is, when you whiteboard something, you visually make it possible for you to see it immediately. So here's what we've done. We've put a little floating assumption here. This is called a linked picture, by the way. And if you double click here, you can actually go through to the assumptions. But what's cool about the linked picture is it really reflects what we've just typed here. So look, if you type here, hello, and we go back, check, hello comes through. So it's this cool little linked picture concept, and it's just it's one of your pay special options within Excel. But anyway, now I've got the ability to see my assumptions. And remember what I said, we are mathematicians, so we've got building blocks here. We know assumption 1 is the range name assumption 1. Assumption 2 is the range name assumption 2, right? So now we've got that building block. It's going to go into our formulas, and it's going to go, and we're going to use it for our forecasting. Okay, now the first thing is, let's just work for a moment on budget 2021. I'm going to open this. So over here, what we've got now is here on this side, we want to now go and build a budget for the year up to the end of it. But we are now already in September 2020. And how do we know that? Well, let's go and have a look here. Here's actuals for the current year, and it actually has already in it. I've opened the wrong little grouping there. Sorry. Going to open this one. There's actuals for the 2021 year, of the current year, and you'll see that it's actually got 1 to 6. Everything is already populated. So what does that mean? Well, it's immediately giving us ability to say, well, we're not going to predict the history. That's already happened. So we're just going to say the budget for the year up to date is now everything from 1 to 6. Okay, so now we're going to work with DAXing formulas first. DAXing formulas is formulas within a table. Okay, so let's keep track of this. Okay, guys, this is cool. First of all, I'm going to do it's block formulas. And once I've got that block formula, it actually calls up all my field names. Field names are the names within each of these columns. Okay, so now you've got this matrix environment. Think of it where I can say across spans my account number, and downwards is different field names. Okay, so what do I actually want to call up here? Now look, it's also a smart filter. I can say actuals. What am I calling up? Well, I want to see the actuals of the current year, so you can read it nicely there. I want to call up my actuals of my current year in the first month. Why? Because I'm in the first month, and that is the actual. I close that block bracket and I go enter. Right, now if I actually go and just pull this across, then now I'm gonna pull it down to that. Sorry guys, come back. There we go. Right, so now I'm gonna pull it across. I'm just gonna enter it there, and you can do one or two things with a DAXing formula. You can't just say Control C, Control V, because you're actually gonna pull the same month. You don't want the same month. So now I can either go and change it over there to, and I'm going to say enter, or I can just actually come from here and I can just drag it across by scrolling over that cell up to the corner at the bottom right and then going across. What has now happened, it's smart enough to know, well, you want to actually drag me across on the references. So there are references towards the left, which says, well, actuals is packed 1, 2, 3, 4, 5, 6. And I've said, well, you just refer it also the way I've dragged it, and you drag it across those references. Okay, so now it's all the actuals over here. So what I want to do next is go Control C, and I actually want to paste everything. Now I've gotten a very nice and a quick kind of budget. Well, and the budget's just started, because it's actually not budget, it's still actual. So here we've got reports. So we're just going to say refresh and start, and stuff is starting to build here. Remember what we're trying to do. We're actually saying what we as a management team want to see what's happening as we go along. Why? Because we want to actually have a good budget, a quality budget that we then can populate and play with, which is now where we're at in the spreadsheet. And then once we're happy with it, we sign off, and then we prepare what we call a CSV file, which can then be imported into Pastel, or Pastel for this purpose, but an ERP system, hopefully, because an ERP system is a great environment because the database is stable and it captures data and it holds data. An Excel spreadsheet is a tool for calculation. It doesn't hold data that well. Why? Because I can easily delete stuff out of here and you won't even know it. Whilst the database, you can't do that, except if they've allowed it specifically, but then they usually have a table at the background that says deleted items. Right, now next, we are now, check how cool this is as well, it balanced to 0. Why? Because trial balance have to balance to 0, right? Otherwise there's something wrong with the data. So now we've pulled it across, we see everything is now in from a month-to-month level. Now we're going into the future. So let's do some cool little, mathematician stuff here. So firstly, we're going to start with sales. Now remember, we've got a revenue growth assumption here. So what do we want to do? We're going to say equals, and what growth is there? There's growth of what is the building block? The prior year data, not the current year, because it doesn't exist yet. We want to use prior year data and say we're expecting a revenue growth. But let's be, even more kind of creative than that. We maybe expect a 20% growth on a month-to-month basis, or we expect a 20% growth on an average basis. So let's work with an average basis in this scenario. Okay, so I want to go for the actuals, but the prior year actuals. So I'm going to call up the actual number for the prior year. There we go. It's the full year, and then I want to make an average divided by 12. So because I want to get back to months. Okay, then I want to times it by 1 plus my revenue growth. Now check this, 1 plus my revenue growth, which is assumption number, look at it, read it, 2. Okay, so I'm going to call up assumption 2, right, and close my bracket, and now we've got a number coming out here. Okay, so I'm going to pull this, and now I can just control C, control V. I want to take that across. Why? Because I actually don't want to drag it. If I drag it, you'll see again it's going to pull weird information through because it's actually dragged towards the right of that field which is available to us when we DAX. So I just want to really pull it through now. So that's quite important for me to show you guys. Just that's a control C, control V environment versus a dragging environment that I just did here on the left. Now I'm going to quickly call up only my sales related items or accounts. Let's go to sales. We want to say you just call up sales. Remember the smart filter. I didn't have to go and untick that even. Just let's for a moment keep in cost of sales. Okay, we can see sales is up to there. Now I can go and drag my formula, okay, that I just built there. I can just go and copy paste it. It's going to actually, what's cool about it, it's going to find in every single field, it's going to find the full actual year's total of the total in that account towards the left. Okay, so again, mathematician, just bear with me here. Okay, so this is a very cool kind of robust environment. Okay, now, by the way, F9 is a very nice little shortcut if you're ever not sure what the amount, what the value is. If I go and double click my assumption to F9, it gives me 0.25. So there, I can actually see it. So it's also a nice way to audit your formulas. Now the next step is cost of sales. Do we have something for cost of sales? Yes, we do. We have something called GP percentage. That's going to help us. So we're going to go and say, you know what? I actually in an assumptions kind of environment, what can I do? By the way, something we've just done here, check if I go and refresh this, you'll see stuff is starting to happen here. There we go. It's just updated. Now the next step is to go back and we want to calculate cost of sales. So what first of all, cost of sales, if it's GP related, is something based on revenue. So we go equals the sum, and look at this, you can actually have some nice robust standard formulas within DAXing formulas within a table, which is very strong and powerful stuff. Okay, so we're going to sum our revenue of that specific sales in that month that we've predicted. We're going to say, well, times what? Well, times my 1 minus my GP percentage, which is assumption number 3 in this case. Okay, but what do we know about revenue? Revenue is a negative in this case, not a negative as a bad thing, a negative as a credit, a minus. because in accounting we've got debits and credits, and in this case credits are minus values. They're actually good values, but it's just the way it balances, because otherwise it wouldn't in one column balance to zero. So we're gonna make this a negative. And look at what we've done. We've actually said we're just gonna take one line and make cost of sales. We're just gonna predict cost of sales on one line, and that's fine, because remember, you don't have to go and be necessarily going to be so detailed to go into every single account. You can actually say, well, I just want to model this and budget it that cost of sale is one globular number. It's not a bad thing. Okay, so there we go, 17,000, and I'm going to pull this across, and it's obviously going to be 17,000 all across the board. Once again, I can go here and I can refresh. Look at this cost of sales. It's 181 at this stage. Refresh, and it goes to 283. Right, and you can actually see at the bottom, are we going to make a profit? So this is a little pivot table that we've taken, and we've used all of this, the actual mappings we've got available to ourselves, so that we can now predict and see as we budget. Next step, what did we also have? We had a December bonus. So where's December? Over there. So it's also nice. You can see actually columns. This is called. This is more it's also got some DAXing in it, but it's actually more a data formula. So you can see we've got some trim and indexing functions and that in there. But ultimately, visually, don't worry too much about the formula at the moment. That's already there. It's visually giving you an answer December 2020. So you've got that kind of like, okay, I'm the mathematician, but I know what this column is about. So we're going to go down. Okay, remember now we filtered. So we're just going to unfilter everything. So now we can see all of the values. And let's quickly go and just call up a salaries and wages account. So you know what? I'm going to filter on this because I don't know where it is now. But again, nice is I've got these smart filters. All right, I just want to go in salaries and wages. There we go. And here we have salaries and wages account 4400. And here in the December month, I'm going to say, okay, equals which one? Well, assumption number 4. There we go. So it's going to push in my 50,000. Now we go back. So now we've got, things are starting to happen over here. You can actually see how we've populated sales, we've populated cost of sales. Now we can, for instance, go to, let's say we want to actually do something on, let's call it our operating expenses. Okay, so let's go to operating expenses, which is below the GP line, because we already touched on the GP line now. Operating expenses. Okay, these are my operating expenses, and what I don't want in is my salaries, but I'll see that actually pop through. So we've predicted inflation here. So let's say all of this, okay, every single one of this is actually, we're expecting the following. We're expecting it to be the same as the prior year for the month that we're in, 7, okay, and we're expecting it to actually go up by 1 plus my inflation, assumption number 1. Right, there we go. Now we can drag that across, and we can now start populating it downwards. And the only place we shouldn't be populating into is my salaries account. So there we go. So I'm going to pull it down, and I'm going to pull it across here. Okay, there we go. Okay, so let's say that is what we wanted to do now for this scenario. So what we want to do next is we actually want to see, are we going to make a profit or loss according to our assumptions that we've just made? Or we're going to make a loss. Remember what I said, debits are pluses. So this is a 3,300. I have to take balance sheet out. Sorry, let me go to the top. It's actually a bigger loss than that. It's a 42,000 Rand net profit, net loss. So now immediately we've got this ability to say, okay guys, this is not good. What we need to do is we need to see how we can get that to a profit. Here we've got some graphs, by the way. So let's quickly have some graphs and visuals as well for ourselves. Okay, we're going to use a pivot table function here. So we've linked this pivot table to the actual budget. And now we can go and say, well, you know what, give me my actuals for my prior year. Okay, let's take that. Oh, I have to fall off my chair again. Oh, there we go. All right, cool. Let's put that in. Now, let's just see something called statement. That's one of the fields. I just want to see the income statement at this stage. I don't want to see the whole balance sheet and everything. I just want to see the income statement. And what do I see here? A 76,000 Rand negative. What does that mean? It was actually a profit in that year. So this is quite difficult to manage and to see. So you can also you can actually click here, right click, format, access, go here, and go to say values in reverse order, and immediately it makes your negatives positives. And it's important here because you visually want to see, well, above the line is a good thing for my income statement. Okay, so now what we're going to pull in next to that is actuals for my current year. Let's go actuals, and remember now that's each 1, 2, 3 to 12 is month. I want the full year. There we go. To date we made a loss in the current year. Nice. Okay, so now I can see that. But what's the next important one is the budget values. I want to see my current year budget, and I want to see the full budget for my current year. We just said we are predicting a loss. Remember, if I just scroll over that, 43,000 Rand loss, we can even give it a little bit of labels. So let's do that. Let's add labels, data labels, and there you'll see. Come on, put it in all data labels. There we go. All data labels. Okay, now we know what it is. But what do we want to predict? We don't want to predict, or do we want to budget for a loss? We want to budget for a profit. Okay, so now we can start playing with it a little bit more. So let's first go to our assumptions. Now, if we go to our budget, we say, well, what did we actually assume in this? We assumed that there are, for instance, there's an inflation of 6% and there's a revenue growth, but we did it on the medium scenario. So let's go, for instance, and try it on the high scenario. Okay, let's see what happens. High scenario, and we go back to our graphs and we go and right click, format, and refresh. We've actually gotten a bigger loss. Why? Well, we had a much bigger bonus. So that obviously has impacted this even more negatively. So now we can start playing around and say, okay, well, guys, that's not good enough. Even with a revenue growth of 40% and a GP of 55%, we can't go up to 100,000 Rand a bonus. So let's now start changing this. We say, okay, well, we have to take that down to 50,000, and our inflation, well, we can't do much about that. And now we can go back, and remember now, just because we've changed that, automatically it'll change the values, and we need to go back. You see, it's a high scenario and it's still 50,000, but 9% inflation, revenue growth is 40%. Let's go back here. We go and we say refresh, and we're starting to see very close to that number where we want to see positivity. Now let's say, well, you know what, revenue growth we actually think needs to be 55%. Not 5,000%, 55%. There we go. And let's go back to the graphs, refresh, and let's see what happens. Very close. So what do we also need to do? Well, you know what, guys, unfortunately we cannot have such a big bonus. We're going to have to just have a 25,000 Rand bonus, and right click, refresh. Hey guys, we are into the profit, and now we can start smiling and say, how do we make this work? So what I wanted to just kind of like touch on is we are able to work in this robust environment, which is quick and easy to kind of get graphs out of it, to get nice reporting out of it. Here we can refresh it again. You can see there's that profit that we've just spoken about. And you can see all these nice robust numbers. And the best is, once we're done, once we're done, we can now actually go and say, happy with this. We can now actually go and generate a CSV file, which can be imported into my ERP environment. Okay, well, there we go again. Flying all over the show here. So into my ERP environment. So you'll see here, once you're done, you can actually say ready to now go and process my import file for Pastel. And you'll see once I've done that, I go, do you want to generate the data? I go, yes. Something happens very, very interesting there in the background. It creates this little file, which is perhaps ugly to the normal eye, but it's quite cool because it's now done. You go, it's converted, and it says to me it's done something. And here in my environment, by the way, in my WOW demo environment, there at the top on the 4th of September, just 35 minutes after 5, we've created this little CSV file, which can literally be imported into Pastel. It's just available now for us to do and to immediately create a Pastel budget environment. Now, what's nice is next time when I run the budget, this will be an empty again, and it will actually populate into the left-hand column in here and saying, well, what do you actually already have in your system from a budgeting perspective? Because remember now, we want the cycle environment. We're going to say, but what I want to try and do is I want to create a budget. I want to import into Pastel, and I always want to compare my budget to my actual, but then I also want to have the ability to update my budget, to make a secondary forecast. And there's tons of ways to also make sure that you don't lose your original budget, by the way. But yeah, so what I wanted to really work on today was to help you guys see how you can be mathematicians instead of being spreadsheet builders. And by using stuff like data tables. This is a data table, remember that? This one over here that's got these filters, the whole thing is a data table. By using DAXing, these are the formulas that we just created. These are DAXing formulas. You can see more, kind of like other DAXing formulas over here and here. And using range names, these are range names, name cells, okay. So, and then the last one is also by actually looking at pivots and pivot graphs to help you combine and bring together all this information so that you can literally have a look as to what the answer will be before you start importing it into your ERP system. Well, I hope you guys have enjoyed that. I know I have. This is a phenomenal field and it's a phenomenal subject. I just absolutely love it, and I think it's so important. And hopefully this makes budgeting and forecasting easier for you guys, and even easier to bring into your ERP system. If you have any questions, guys, please pop me an email, alec@mybi.co.za. Would love to help where I can. And if there's any other kind of like data related questions, also you're more than welcome to reach out. Really appreciate your time. Have a great day, guys. Thanks. Cheers.